STF is, as you said, it's quite different to other NBFIs. STF actually mainly focuses on the uplifting and empowering the rural entrepreneurs of this country. And then as a result, STF has actually evolved in their product range, product offering, and from catering to microfinance loans, now they have moved into SME loans and then leasing. So they have been actually riding the life cycle of a typical entrepreneur, rural entrepreneur. So towards that, they have been able to leverage on the strong Sarvodaya brand name, which they believe is coming from the philosophy of the Sarvodaya movement, which has been there for about 6 decades. So the trust, the relationship that has been created has helped the STF to bank on their clientele, and with the, as a result, they have ethical business practices in place where they have been they don't actually fund or support businesses in the tobacco, alcohol, gaming, maybe trading of meat, and also those are all taboo sectors. And of course, with the extensive society network of the Sarvodaya movement running into about 5,400 societies, that actually gives a very strong reach to STF. And that has, so that in addition, actually they have about 30 plus, maybe about 21 window officers, so about 50 odd in all. So their plan is not to have any brick and mortar outfits, but to leverage on that 5,400 societies that they have. So through those societies, actually they are in a position to reach out to the rural community. So those are some of the key strengths I see in STF compared to a normal NBFI. So actually, when it comes to valuation, we use a couple of methods. Residual income, peer multiples, and looked at the recent transactions carried out by the company, because they had a share issuance beginning of 2021 where they had raised about 800 million at a price of 22 rupees. So the IPO is also coming at the same price. So if you look at the multiples, so the process, so we looked at their growth prospects, strategies, looked at their business plans, and then forecasted those cash flows for the next actually about 7 to 8 years. So there we actually looked at their growth prospects as because the main reason for the IPO is to enhance the capital. So all this time they were not actually meeting the capital requirements, so there were certain constraints for their growth. But with the expectation of meeting these capital requirements, those constraints will be sort of eased out, and as a result they will be able to grow. This being a small company, the growth obviously will be higher because the base is low. So they expect significant growth over the next 7 to 8 years, probably asset book growing from about 9 billion to about 35 billion. Of course, that's over 7 to 8 years with a CAGR of about 20-25% on an annual basis. So we have looked at all that, and then of course obviously looked at the peer multiples. So diversified financial sector as per the classification of stock exchange. If you see, it's about PBVs of that sector, it's about 1.8 times. So our valuation, actually we have valued it around 1.05. So you'll see a significant discount to that multiple. That's about 40% discount to that multiple. And even, so that is for the diversified financial, but even if you look at a peer group where STF operates directly, right? Say looking at NBFI sector, especially looking at as a book of less than 35 billion. So the multiples, the PB multiples are around 1.2 plus. So we are actually pricing this at almost at book 1 times. So in that sense, and even if you look at the PERs of the diversified financial sector, there again we are looking at about 40% discount here. And the main thing, as I told you earlier, is the transaction that we did recently, where the company was able to raise this 800 million. So based on that only we have come up with this 22 rupees per share valuation. So which we think there is ample room for growth, and based on our valuations, the technique that we have used, we see an upside of about 18% for an investor who will be coming through the IPO. So if you look at the cost to income ratios and all, there is no plan of, as I told previously, no plan of putting up brick and mortar facilities, right? So they'll be leveraging on this society. So which means they will not actually have to incur a lot of costs with their digitalization, which is a very important piece here. They have been able to improve on their efficiencies and bring those the connectivity between the customers and the company when it comes to repayments, deployment of disbursements, all that they have been able to digitalize. And I think their smart village app, that's a good creation where they have actually come up with that and trying to connect the customers with the STF network. Also, in addition to that, through the smart village app, they are trying to actually connect the rural community with the marketplace. So that's that's lacking for the entrepreneurs out there to sell their produce or market their goods. So through this village app, they are trying to connect the market and create a market for them. So I think the intention of the company is to first bring the goods to the Western province to create a market for that, and then of course subsequently create a global marketplace for them, those entrepreneurs as well. So they have a clear vision on that, and so those were actually looked at and factored when we looked at all this pricing.